few key points this morning on why we're high conviction on RCG. We've obviously been mentioning it quite a bit over the last few months, just post the sell down and the result. Wanted to update you. So firstly, RCG upgraded its guidance a few weeks ago as we hoped, but we still believe it's basically conservative. The EBITDA guidance range is $58 to $60 million. I can see a scenario where we get at least 5% upside to the top end of that range, which would see the group ultimately deliver around 50% EPS growth, and you just won't see that anyone else in retail, I don't expect. And that's with RCG assuming that the Accent like-for-like sales growth slows to the low double digits, and they've been doing, circa 25% plus over the balance of the year. So, that drop away looks unlikely in my view. The medium-term growth profile looks, exceptional. So we're looking for 45 to 50% growth this year in FY16, and on my forecast, another 20% in FY17 and 17% in 18. So, pretty extreme growth over the long term. And this is largely due to the acceleration of the store rollout, as they announced a couple of weeks ago. And that's largely within Skechers. So they're really accelerating that post, renewing that license agreement and extending that license agreement, and via the Platypus multi-branded concept. And like Baby Bunting, when you're rolling out, this number of stores up off such a low base, the upside and the growth is material. We don't have to factor in much in the way of like-for-like sales growth in outer years to get to come up with this EPS growth either. So most of it is coming from pure old-fashioned store rollout growth within Accent. The company is now basically capitalising on some major global brand growth trends, and at the forefront of this is Skechers. And if you look at Skechers US most recent fourth quarter update, which is a couple of weeks ago, their EPS in the fourth quarter grew by I think 43%. So the brand's really resonating internationally, and Accent and RCG are set to benefit from this. Aside from Accent, we had two other potential new store formats which haven't been announced yet, but the company will give us more on that over the next year, so provides a whole nother leg of store rollout optionality for the group. This includes a potential new performance-based athlete's foot chain of stores, which they're going to trial and then potentially roll out in a year's time. And secondly, a potential new Accent format. And if I had to guess on the latter, I'd suspect it's something similar to the current multi-branded Platypus chain, but for an older generation. So one or both of these could be material, another leg of growth in the rollout for the group, and a key catalyst as well. So, it's pretty simple, multiple drivers of growth here in the short, medium and long term. We rate this management team, both the founder group, of RCG and the Accent guys, trading on a peg sub of 1 in all our forecast years. We see another 15% upside from here, and most beautifully, there's no housing exposure at all. So that's RCG, high conviction. Thanks.